Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always as Hormus Fatakia and Reema Tendulkar. Well guys, a lot happened last evening, right? And we've been discussing it since morning. But you know, we started the morning where the markets were like, okay, we're shrugging off most of the concerns, but now we're seeing that sharp cut that has come by on the Nifty. It's a 150-point downtick on the Nifty currently. It's below that 24,450 mark as we speak, and that's an important level to watch out for as well. Mid caps not doing well, but in line with what the benchmarks are doing. That index is down 0.5%. We have Bank Nifty, which is sitting with cuts as well, and largely these export-oriented sectors. We have Nifty Metals, Nifty Auto. These have been big drags. Nifty Energy, that continues to be on our radar as well. All of these extra tariffs have come in because of oil that India is procuring from Russia. A lot of it we'll be watching out for because we still have the 21-day deadline, and that is where the sixth round of negotiations with the US will start as well. But for now, markets taking that sharp turn lower as we speak, and it remains to be seen which way things go as far as trade talks are concerned.
So it's 24,422 on the Nifty. We've breached the 100-day moving average on the way down, which was a level of 24,450. So now well below a lot of the support levels. Technical analysts were pointing out that how the 24,450 mark was an important support, and that's gone. As Sonal pointed out, we started off with a fair degree of resilience, but now weakness is seeping through. I guess the two sectors which are relatively unaffected, they're in the red right now, but not with deep cuts. It's IT and FMCG. And in terms of individual frontline stocks, it's Hero MotoCorp, that's up close to about 0.7%, Power Grid, HDFC Life, some small odd pockets of green today.
Indeed. I mean, to keep in mind that today is also the weekly options expiry. And before we carry on with the show, let's go across to Parikshit now, who is in an exclusive conversation with Rajiv Bajaj, the Managing Director of Bajaj Auto.
Bajaj Auto posted a revenue growth of 6% year-on-year in Q1 FY26 at 12,584 crore rupees. The company's exports, premium motorcycle sales, CVs and Chetak delivered double-digit growth. The company delivered an EBITDA of rupees 2,500 crore and profit after tax of 2,100 crore. Bajaj Auto and TVS Motor Company have been leading electric two-wheeler sales, followed by Ola Electric. But the big issue and hurdle for the EV industry has been the rare earth magnet crisis, and now the industry will also have to face tariff uncertainty. There are US-India trade tensions, but that also has a ripple effect on tensions all around the world. Joining us now to discuss Bajaj Auto's trajectory here on in this uncertain environment is Rajiv Bajaj, the Managing Director of Bajaj Auto. Mr. Bajaj, thank you very much for joining us. Let me begin by asking you first about the US tariffs. An additional penalty of 25% coming in 21 days. If we don't have a solution, the tariffs would be 50%. How bad is this for the Indian industry overall?
Hi, Parikshit. Well, I don't know about the industry because every company's situation is specific to itself. For Bajaj, I can tell you in a word that we are quite unconcerned, and I'll tell you why. Our exports to the US are basically in two brands, KTM, that's about 10,000 vehicles a year, and Triumph, which is about 5,000 vehicles a year. So, firstly, it's 15,000 vehicles a year in a volume of about 5 million vehicles. So that's less than 0.5% as far as volume is concerned. Nevertheless, it's an important market. It's a very profitable market. So it's not a business we would like to lose. And I don't think we are going to lose this business, and I'll tell you why. In any case, from around this time, from August, September onwards, exports to such markets, including the US, do dip because goods will only reach there, by November or so, by which time the winter sets in. And demand, turns down significantly. So, in any case, the next 3-4 months are the weakest months as far as exports to such advanced markets are concerned, which means we have time to rejig the supply chain until almost December or January, when we will start again exports for the spring and summer season. And therefore, we have many options, whether we continue exporting from India because there is a rethought on the tariff, or whether we go via facilities that are in Europe or in Asia, such as Thailand, or somewhere in LATAM, there are many possibilities. So frankly, we are not impacted significantly, and we are not concerned.
Right. I would also like to ask you about how the global tariff situation is impacting your exports. And do you expect a hit in FY26 because of the sentiments and the uncertainty globally?
Not really, Parikshit. I mean, in a word again, or in two, I would say I don't see any impact. You know that post-COVID, once our export markets started recovering, particularly in Africa and LATAM, exports came back to a level of about 140,000 a month compared to about 200,000 a month pre-COVID. And as you may have seen, in recent months, they have come now nicely to a level of 180,000 a month, with an all-round secular recovery, and particularly so in LATAM, which we are very happy about because, again, with pulsars and dominars, it's a very rewarding market for us. Really, the single sore point that remains is Nigeria, that used to average 50,000 motorcycles a month and is still hovering around 15,000-20,000. So with the exception of Nigeria, for motorcycles and some markets like Egypt for three-wheelers, where three-wheelers are now currently banned, really our export markets have come back strongly. And I'm actually quite hopeful that if this trend continues, it may not be long before we are back to that level of 200,000 a month.
Right. Just to speak about the rare earth magnet crisis, in April this year, you had said India's EV industry could come to a grinding halt due to the rare earth magnet restrictions by China. What would be your outlook now, as China has not lifted the restrictions for India still?
Well, that is still a very, very uncertain situation. I must say this, every day is a new day. Again, it's a very company-specific situation, Parikshit. For us, as you are aware, that in the first quarter of this calendar year, the Chetak became the market leader in the electric scooter segment. And in the recent Q1 of this financial year, our electric three-wheeler, the GoGo, became the market leader in that segment. So what I'm trying to say here is that our volumes are quite high. We would like to do typically 30,000 Chetak a month and in excess of 10,000 electric three-wheeler a month. So for a high volume player, there is a big impact because we don't carry the kind of inventory in number of weeks or months that a low volume player would. And therefore, the immediate solution that seems to be working for us now is to get low rare earth, or LRE as it is called, magnets from China. That has started up. The next step would be to try and source LRE from elsewhere, because what if China bans LRE tomorrow? Then you're back to square one. So where else in the world can we source these from? And finally, I think all of us are working towards ferrite magnets or solutions that have no rare earth at all. So I think that is the roadmap ahead of us.
Right. What has been the cost implication of this to get low rare earth magnets? Have you had to do re-engineering?
Yes, of course. You have to incorporate certain changes in fundamentally your motor design to be able to operate at temperatures that are conducive to maintain performance, to maintain reliability with low rare earth. So fortunately, the R&D has really been working through the day and night on this for the last several weeks. And they have solutions in place for both the Chetak and the GoGo. And therefore, even as we speak, we are producing now with low rare earth magnets.
Right. Now, to what extent is the rare earth magnet crisis impacting your deliveries? In Q1 of FY26, what was the impact in percentage terms? And what is the kind of impact you expect in Q2?
As things stand today, I must again say this is a very uncertain situation, and tomorrow I could have a different answer. As things stand today, first of all, in Q1, we had almost no impact because the inventory that we were carrying between ourselves and our suppliers has seen us through in Q1 largely. And for the whole year, also, I think we will not have impact. Now, more specifically in July, as you know, with the Chetak, we were at about 50%. With the three-wheeler, we made it to about 90%. I think we made 8,000 of the Go electric three-wheeler. I had said a couple of weeks back that I see us staring at a zero production month in August as far as electric vehicles are concerned. But I'm happy to say that, as I just mentioned, things have changed a lot in the last 2 weeks with the availability of LRE. We are now looking at least a 50% availability as far as the Chetak is concerned in this month, in August, and perhaps about 70% as far as the Go is concerned. Things stand today. For the month of September, actually, we should post our highest numbers ever, again, as things stand today. But we will still fall short of demand only because, demand is really high next month, anticipated to be very high because of the festive season. So today, if I have to hazard a guess, I would say something like 40,000 electric scooters, that is the Chetak, and well over 10,000 of the Go electric three-wheeler in September is not out of the question if the LRE magnet supply continues as it is continuing today.
Right. So if we were to ask you about the full fiscal, would you trim the production outlook, or you would say you will remain on track despite the crisis?
Neither of those two. I will actually say that we think we can now do better than we had even planned for the whole year, because by October, production should completely normalize. We should have made up for what we will lose, what we have lost in July and what we will lose in August. And in fact, the reception is so good. As I said, both these brands are market leaders in their segments. So in fact, I think we will hope to make and sell more in the second half of this financial year than we had anticipated at the beginning of the year.
Right. So if I could ask you, sir, what is the kind of overall numbers that you're looking at for the full fiscal in terms of production and the growth over FY25?
That's hard to say, Parikshit, because again, it's very, very uncertain, so it can get a little hypothetical. But I will tell you this, that in terms of capacity, we've pushed it up to 40,000 for the Chetak, and in anticipation of future launches, we are moving it up to 60,000 in the next few months. And for the three-wheelers, I think I would be right in saying we are pushing to 15,000 a month. We'd like to go even higher because although we are market leader, we are still a shade under 40% share. With the ICE three-wheeler, as you know, we have close to 80% share. And that's certainly our goal that, why shouldn't we have 80% share in the electric three-wheeler segment as well?
Right. In terms of more launches, what about the EV electric scooter plans? Are we going to see more variants of the Chetak at different price points, electric motorcycles, other EV products?
A bit of everything, actually. So as far as the scooter segment is concerned, as you know, we exited the ICE segment nearly 20 years back. So this is a segment in which we had to, we had a fresh start. So we started with the new avatar of Chetak as the electric. I think to answer your question, various SKUs of this platform at various price points, that's been done, I think, quite effectively, which is why we acquired leadership. Of course, more of the same will continue to happen, but we need to launch a new platform, which quite frankly, we would have launched in this quarter. We have deferred that now to Q3, possibly even Q4, as in January. It all depends on the availability of magnets because, as long as there is some constraint, we want to keep making more of what is obviously currently selling before we introduce a new product and make life even more difficult for ourselves in terms of additional demand. As far as three-wheelers are concerned, unlike with the scooter, this is where, as I said, we are 80% ICE share. We are the market leader. We are leveraging that leadership, or we have leveraged that leadership with the Go. And I think we are going to take it further. I anticipate you asking me a question on our e-rickshaw foray. And again, we are starting production as we speak. I believe we will go to market in the first 4 markets on 10th of August under the brand Riki, R-I-K-I. So that's going to be our brand for the e-rickshaw segment. And as we are done with the GoGo, we'll build it up slowly. We will wait a quarter or two before we scale it up, because again, we need to get the product absolutely right. We are still, making our way up the learning curve in all respects of technology, product, and customer service as far as electric technology is concerned. So the scale up will be gradual, but we are going to be in the market from this month. As far as motorcycles are concerned, this is not something that we have talked about so far, but I'm happy to share a first information on this, that this is a segment where, it's a bit between the Chetak and the three-wheeler. It's not that we are not in the ICE motorcycle, but we are not exactly the market leader or overwhelmingly the market leader.
Rajiv Bajaj there in an exclusive conversation with Parikshit, and the conversation continues. But we take a short break. Just before that, the market, though, has now slipped to the lowest point of the day, 160 points down on the index, now 0.6% lower. Of course, we need to keep in mind today is also the weekly expiry, so that also has a factor to play. The Sensex is down almost 500 points as we speak. We take the market conversation forward on the other side, but we also put the spotlight on the crypto sector in our new special offering. Coin DCX's Sumit Gupta speaks to Manisha Gupta on the other side. Stay tuned.
CNBC-TV18 presents Crypto Corner, powered by Coin DCX.
Welcome back. You're still tuned into Trading Hour. Cryptocurrencies are steadily moving into the financial mainstream, and a growing number of investors are eager to understand where digital assets fit in the broader investment landscape. In our special offering starting today called the Crypto Corner, CNBC-TV18, in partnership with Coin DCX, aims to simplify crypto investing for the viewers by decoding the latest trends. In our inaugural episode, Manisha Gupta spoke to Coin DCX co-founder Sumit Gupta and began by asking him on how Indian investors view crypto.
See, over the last 18 months, I have seen crypto becoming a very integrated part of an individual's portfolio. From the modern portfolio theory, people want to sort of maximize the returns, risk-adjusted returns, and crypto is an asset class that fits very well there. Of course, the percentage depends upon risk appetite, but I have seen that a lot more sophisticated investors are now seeing crypto not as a speculative asset, but rather a very important asset in their portfolio. And from that point, I think the data also suggests that we were checking the data on our platform. From the last year to this year, H1, we have seen a 24,000 crore increase in trading volumes, roughly 40% of that. And overall, when you look at what is the holding period of an individual, it also tells us that people are now looking at Bitcoin, Ethereum, or the top blue chip crypto assets as a long-term holding asset rather than a short-term.
Investment rather than short-term trading. Sumit, also, what are the various kind of investment options that are available within crypto right now? Because for the longest time, we've spoken about buying and selling, and then it has been about yielding. People are also leasing their cryptos. Are Indians apt and doing that?
I think people who are doing investment in crypto assets are now evolving more to different instruments. I think just like how we have in stock markets, here you can do SIP. So you can start with as low as like 100, 200 rupees, do a weekly SIP investment. People who don't know when to get in, and what is the frequency when to buy. So SIP is there, simple buying and selling is there. People do trading as well. Outside their trading hours, when the stock market closes, people now move to crypto and then
it's a 24-hour market.
It's a 24/7 market. It's more exciting, more volatile. People love it. Traders love it. People are also doing derivatives, in crypto assets. That's also emerging. And people are doing yield. For example, if you have Ethereum, so you can stake their Ethereum and get 5% yield on that.
But what percentage of Indians are actually doing that or understand that?
It's increasing very fast. So on our platform, I would say roughly 10 to 12% of people, of investors, use these kind of different instruments to maximize their returns. But that number is increasing pretty rapidly.
Sumit, why would you say that the interest in this space is increasing? Is it because of US, because we've seen very strong legislations come in from there? Or is it because of the returns that you see? Or people really do think that crypto now is a strong portfolio diversifier?
It's a combination of multiple things, Manisha. I think so many things are coming together at the same time. We have seen increasing regulatory clarity, so many discussions happening in the US. It's not like, okay, just one other topic. It is actually the prime topic of discussion when it comes to financial landscape in the US. Bitcoin price has essentially demonstrated that highest ever inflows, Bitcoin being the most successful ETF ever. There is mainstreaming happening. So many people are talking about it because when price goes up, people start to read about it. It just triggers their curiosity. And when people read about it, they build their conviction, which creates a ripple effect. So I think everything is coming together, which is going to make it mainstream.
What is the investor profile right now? Because earlier it was only about enthusiasts and then people who wanted to try something new. But now we do understand that it's corporates, it's institutions, investors, even HNIs or family houses in India also seem to be getting into this.
Oh, yeah, absolutely. I think so I've been into this space for almost 8 years now. When I was starting, it was mostly young, geeky people who sort of want to do ICOs and, oh, this white paper came and let's just read it. But now it's a lot more serious. I get like messages from our VIP customers. We have a Prime offering, CoinDCX Prime, where all the HNIs, ultra HNIs can reach out and we handhold them. We've seen massive activity there. In terms of the average age, it used to be 25, 26 back then. Earlier it used to be 21 and then 25, 26. Now it's like 30. 28 to 35. We are now floating in that range. People who are either working professionals, people who are doing businesses, they are now getting more and more aware and they also want a piece of the pie. They want to have like 2%, 5% Bitcoin in their portfolio. No one wants to miss out.
Oh, absolutely. And those are all opportunities, by the way. But Sumit, let's focus on the challenges as well. And what is it that you would say a first-time investor should know about crypto? Would you say Indians are now getting used to those higher taxes? And then there are, of course, challenges because of the kind of volatile moves that crypto puts forth.
Look, Manisha, crypto is volatile. It's risky. And that's the reason why returns are higher than other asset classes. People need to think beyond hype. People who are thinking to invest in crypto should not look at it as a 5x or a 10x multiplier, that they'll put X amount and it will suddenly go 5x. I think we've gone beyond that. Now it's more moderate. Volatility has reduced what it was 3 years back.
Right.
Yeah, I mean, like there are millions of tokens, but important to restrict it to only quality assets that have demonstrated their potential over several years now. Anyone who is starting new, I think the general advice is start small, understand, learn about it first before you just directly put your money.
Small is what, 2% of your portfolio?
I think it depends. People have different researches. I think people have said like 2 to 5% of a portfolio gives the highest Sharpe ratio, like which is like risk-adjusted returns if you want to maximize that. So yeah, I mean, people can start with 2 to 5%. Of course, some people are more bullish like me. I have a much higher percentage allocation to crypto assets. But I think for a general investor, I think they can start small. And as you learn, as you get more comfortable, then basis your risk appetite, increase your portfolio. And when you are starting, just understand that it's a risky asset, it's a volatile asset. So only invest what you feel you can afford to lose. And then when you are really educated about this, the technology, the category, then basis your comfort, you can increase it.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Now, at the core of the US-India tariff tensions is a long-standing demand from Washington. US wants greater access to India's agricultural and dairy markets. And this push has come up in every trade negotiation. And in a way, it was a deal breaker for why we haven't struck a deal so far with the United States. But India's position has been firm, even now as we are slapped with a 50% tariff. In fact, speaking at an event earlier today, Prime Minister Modi said that he remains focused to protect the Indian farmers' interest. Listen in to Prime Minister Modi's first reaction to Trump's tariffs.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Very firm response coming in from Prime Minister. He stands behind India's agricultural and the dairy market. But let's get in a market opinion now. Markets are slipping. We're down close to about 150 points on the Nifty. Prashant Khemka, founder of White Oak Capital Management, is with us on the show now. Prashant, hi. Thank you for joining in. You know, we just spoke last week on Editors Roundtable, and at that point, it was unfathomable, right? A 50% tariff. A friend would become a foe. But now, as we're dealing with this reality as it is right now, it may change tomorrow. How are you dealing with it? What are your initial thoughts on how this is going to play out?
Certainly, Rima. Good to see you. He is, as we discussed at the roundtable as well, Trump is, by design, by his choice, unpredictable. So let's first of all agree that it is not possible to predict where it would all settle. I think India is reacting in a very responsible manner with the patience that India has shown in not rushing into any kind of a trade deal. Because even if you strike a trade deal, there is no saying that Trump will stick to it. He can always come back and, like if we had struck a deal a month ago, he could have always come back and because of Russia importing the Russia oil import, he'll impose additional tariffs on what is already agreed upon. And there's no, you can't, argue with someone who, openly can defy logic at his whims and fancy. So I think the only thing we can do is wait. In my assessment, having said what I just said, it is his negotiating tactic. If you look at his past pattern, he generally jacks up his rhetoric and his tweeting with some such measures as they imposed on India, with other nations as well when they're close to reaching or they are in final stages of negotiation. Here he's trying to hit two targets with the same arrow. One is the Russia negotiations that they're having in the midst of related to Ukraine war, as well as the India trade deal. So I think it's very convenient and it is predictable. At least I think it's become somewhat predictable of Trump that close to final stages of negotiation, he ratchets up his rhetoric and such measures. And hopefully, as and when some kind of a deal is finally settled, my assessment is that final tariffs will be well below the 50% and hopefully would be well below the 25% initial tariff measure as well.
So if once and when we see the final deal as well, Prashant, considering that it is below 25% also, do you think there could still be some sectors which could be at risk? We spoke to a lot of textile companies today. The gems and jewelry sector spoke about how it could be a big hit if it does come about. Do you think below 25% as well, these sectors are at risk?
Those are the sectors most at risk, Sonal, that you pointed out, particularly, let's say, textiles. We are competing with nations like Vietnam, Bangladesh, and to somewhat lesser extent, other South Asian countries and even Turkey, they are all in the teens, mid-teens to high teens or 20%, so for us to be presently, as you're showing, 50% certainly renders us uncompetitive in a business that is very cutthroat and margins are slim and returns on capital are slim. But even if it is at 25, even a 5 to 7% or 10% incremental tariff would impact that sector because of the competitive levels in that sector. So either the government would have to step in with some additional support measures for that sector, or the final tariffs would have to be lower than the 25% announced for the textile garmenting sector to not feel the brunt of the competitive hit.
So, in that light, Prashant, does the portfolio tilt acquire a more domestic oriented theme now that because of this uncertainty with the textile names, the shrimp feed names, a lot of these exporters being under the radar, does the portfolio tilt acquire a more domestic oriented face, say for the likes of the consumption names and so on and so forth?
Sure, Hormuz. I think it is possible that for incremental money, you can do that. If you're putting, whether it's fund managers like ourselves or even individual, I don't think there's benefit to be gained by, making U-turns in the portfolio or right turn, left turn, or whatever turn spaces in the existing portfolio, such macro news. I haven't seen anyone make. Maybe I'm wrong, but I haven't found myself a way. Our team hasn't found a way, nor have we seen anyone make consistently any money other than the brokers when you churn your portfolio so much. But yes, on incremental money, if you want to wait out the uncertainty, then it may make sense to be more domestic oriented. But as and when the final deal is out and it settles much lower, then you run the risk of being in the wrong place again. So we always keep a balanced portfolio, meaning we have a good measure of portfolio that is exposed to domestic, a large portion. In fact, the vast majority of the portion of the portfolio is exposed to and invested in domestic opportunities and has always been, not just right now. And there is a decent amount of exposure to export-oriented companies as well. Not only, first of all, IT services doesn't get impacted by all this, but services are out of the ambit, right? So there is a decent amount of exports-oriented exposure in the portfolio. We at least are not changing the mix in any manner.
Prashant, this China plus one was also seen as India's big opportunity to gain from global supply chain diversification. Whether it comes to EMS companies, electronics, auto components. Now, given that India's position may be a little unfavorable versus some of the other peers whose tariff is currently lower, does that derail the entire strategy and the value proposition for investing in auto components or EMS companies?
No, I don't think so, because those are far more structural decisions that global corporates make from a decades perspective rather than weeks or months perspective. I don't think anyone believes this 50% tariffs are here to stay for good. I mean, even if you assume that Trump sticks to them, Trump finally is only 3 years or 3+ years left. That's a long time, I know, but still, I doubt these are factors that global corporates would cause global corporates to make a U-turn. Yes, on the margin, maybe people would go a little slower to see where things settle. But remember, there aren't many alternatives for China plus one in some of the sectors. India, given its abundant workforce and the huge size of the domestic market, is a natural or a strong, I won't say the only alternative, but a strong alternative. So what you're saying, Rima, is true. If this uncertainty sustains for a very long period of time, it can slow down that decision making. But I don't think that reversing, because corporates worldwide have the tariffs, if anything, have demonstrated very strongly that your supply chains can't be dependent on one country or two country or a specific geographical area. So that diversification anyways would continue from China, and India remains a very strong alternative.
Okay, so even if our tariffs are between 20-25%, we're still a very stable, reliable alternative to China. Prashant, in any way, do you think markets are being a little too complacent about this tariff threat? What is your own opinion? Because every time, it just seems like a bit of an underreaction by the markets.
I think, look, if you see in April, when Trump first announced early April the tariffs, hardly any of those have panned out the way he announced. Yeah, most of them have been curtailed down. Yes, India has gone the reverse way, but given the experience that the market has had over the last 3 months, market, I think right now is appropriately assuming that these tariffs on India would not stick, first of all. That. Secondly, If the tariffs were to stick, yes, there would be further potential downside for economic growth expectations and corporate earnings expectations and whatnot due to the economic growth. The direct hit of tariffs is going to be only on a few sectors which are very small from a market perspective or the index perspective. But if the tariffs were to stay at 50%, maybe it could cause some hit to the economic growth. And that could have impact on broader other sectors as well. And that could be few percentage points further on the market. It's not a development that would cause, in my view, a double-digit kind of decline on its own.
The primary reason why the markets also went down, Prashant, could be attributed to earnings, right? We went down from 26,000 plus to sub 22,000 after the second quarter results last year. And this quarter as well, barring a few names, has been nothing much to write home about. Do you believe that this earnings disappointment is here to stay for another couple of more quarters before the low base kicks in and we start seeing some improvement? Or this was possibly the last of the sluggish earnings period that we have seen?
Very hard to say, almost, but I think most corporates, what little they know from what they see in their end market, they are suggesting that another quarter or two of sluggishness is there. However, having said that, in my experience, corporates always say, when in a downturn or in a sluggish environment, they always say a quarter or two of sluggishness, and then we see markets picking up. They have no clue beyond 6 months themselves, but that's what everyone is saying. So everyone else is also saying the same, towing the same line. One has to almost also keep in mind this year's somewhat slower growth is on the back of very strong growth that we've seen after COVID, post-COVID. So 18-20% kind of CAGR we saw for 4 years is not sustainable over time. We have grown low double digits in earnings growth. So in a way, this year is a year of normalization. And going forward, we believe earnings growth should be in line with nominal GDP growth rate of low double digits, 10 to 12%.
Okay, so you rightly pointed out nobody has any idea beyond 6 months. It's been quite volatile, and we really don't know what happens with the commentary coming in from the US and President Donald Trump as well. Always a pleasure speaking with you, Prashant. Thank you so much for joining in today with your views on what's happening with the global picture and Indian economy as well. Time for a short break now. Management of Jindal Stainless will join us next to discuss their Q1 numbers and more.
Welcome back. In conversation now with the management of Jindal Stainless with good sequential improvement in margins during the quarter. Taran Kulbe, the CEO of the company, is now joining in. Mr. Kulbe, thank you for sparing time and joining us today. The first question has to be about the overnight developments, right, with regards to the tariffs on India from the Trump administration. How much of your business relies on exports to the US? If you could share that number. And considering this action, if it is a significant number, do you see that now trending down considering the recent developments, or you're hopeful that things would turn for the better in the near term?
Thanks always, first of all, for inviting over here. And yeah, so this tariff in US, this is definitely a hot topic for the discussion. But if I talk about our industry, that is stainless steel and steel, here the tariff comes under Section 232. And these tariffs were already, they have come in two tranches. The first tranche was in 2018 in March, where 25% tariff was given. And then in this year, last month, June, beginning of June, around 4th of June, another 25% was put the tariff on the steel and stainless steel. So already our industry is having a tariff of 50% from the last month itself. Now,
yes, go ahead.
Yeah, and now if we look at from the market perspective, US, if we look, they are a net importer so far as stainless steel is concerned. And we believe that immediately ramp up of capacity there also would be taking time. So their market is also going to change, the pricing and all in their market. But so far as we are concerned, as a company, I will say that we are a lot domestic focused company. Our markets are doing well. Here, the demand in the domestic is pretty well. And we are continuously focusing on it. And the balance, we are balancing the exports as a balancing number. So US market, otherwise, in terms of while it is important, and we consider that to be important, but in terms of volume, it is not so significant for us. And that is why we are able to constantly give the growth, and we are able to keep our commitments of the volume growth, what we have given to the market. And we are confident that whatever the guidance we have provided, volume growth, we will be meeting that.
So, Mr. Kulbe, just confirming, your exposure to US is very minimal. Can you quantify that for us? Is it low single digits? Is it high single digits? Because around 17% of Q1 FY24 revenues came in from exports. So, just wanted clarity on that. And when you say you'll be able to maintain your guidance for FY26, what is the volume guidance that you have for FY26? Q1 did 9% growth in terms of volumes. What will you do in FY26?
Okay, so Sunil, over a period of time, like you mentioned, FY24 Q1, the markets have changed, the demand-supply situation has changed, everything has changed over the last 2 years. So many rulings have come and trade protections everywhere. Everything has changed. So I think that number we should not be considering. To answer your question, you're on the it is on the lower single digit. But as I said that. We are pretty focused on domestic. Domestic markets are doing fairly good, and our demand is well. And we have provided a guidance of 9 to 10% over the last year for the annual guidance. And that annual guidance, we believe that we are sticking to that, and we feel that we'll be meeting that.
Okay, so 9 to 10% volume growth for FY26, exposure to the US, exports to the US in low single digits, and you're already faced or slapped with a 50% tariff. So there is no incremental headwind. And this 50% tariff happened in the month of June. What about realizations? How are prices today versus Q1? What is the number? And even for EBITDA per ton, how are you likely to trend from here on, sir?
So EBITDA per ton, Rima, also we had provided a guidance of on a console basis 19 to 21,000 rupees per metric ton, and on that we have already performed in Q1. So far as prices are concerned, let me put it like this: that in the stainless steel, always we have been saying that prices are a factor of the raw material movements, and so far as Q1 prices average and current prices are concerned, because in the raw materials not significant movement, so prices are also have not moved much. They are at a similar level, but again I'll repeat that our price movements are mainly with the movement of the raw material prices.
Mm-hmm. So, Mr. Kulbe, now talking about the other one, Jindal United Steel, you've been going around about a 200 crore a quarter EBITDA run rate. Do you expect that to sustain for this year, or do you see some more incremental upside to that number?
So, Thomas, this Jindal United Steel, JUSL, first of all, let me just put it again that this is our 100% subsidiary and of JSL, and this company essentially runs on a job work model, and because our volume growth is there, and already I have confirmed that whatever volume growth guidance we have provided, and we are sticking to that. So aligned to that, JUSL EBITDA is also moving. So yeah, I think we should be hitting the similar number what you have just mentioned.
Okay, last question before we let you go, Mr. Kulbe. What is the capex spend in Q1 that you did, and what is the targeted debt that you will be looking at, considering the FY26 capex number as well?
Okay, so our targeted net debt is around 35 to 3,700 crores. This guidance we had given, which in the beginning, I mean, at the end of Q4, it was around 4,000 crores. Capex guidance we have provided for this FY26 is 2,700 CR. And in Q1, we have done 665 crores capex.
Mr. Kulbe, we leave the conversation here. Thank you very much for joining in. For the markets, still down about 150 points. It hasn't incrementally fallen since the start of the show, so 0.6% down. I think mid-caps, the position has gotten a little bit worse, so 500 points down on the mid-cap index. That brings us to a close on Trading Hour from the entire team. Thank you for watching. Don't go anywhere. Halftime report is up next.